A key setup is I always look at DMI plus and minus, when the crossover happens. That's one of the first things that as a trader I check in on every market.
How's it, everyone? Thanks for tuning in. A lot to discuss today about the gold and precious metal space. Big, strong closes towards the end of last week, going into a long weekend, going into that Easter holiday weekend. So a lot of information there. Got a special guest for you this week, but before we get to it, let's go and get the disclaimer out of the way. All right, so nothing we discuss here today constitutes a solicitation to buy or sell any security. This is for informational purposes only and not to be construed as investment advice. For more on that, head on over to allstarcharts.com/terms. So now let's get to the charts, and I want to introduce you to Phillip Streible. Really excited to have him on the show today. I'm a big fan of his work. He's over Blue Line Futures, over 20 years of experience in the industry with futures and Forex markets. And I really enjoy the way he sees the markets. Phil, thanks for coming on.
Yeah, thanks for having me.
So two of the things that are just really standing out right now was just the big resolution. I don't know if it's necessarily a resolution. That's something we can discuss. But we did see new all-time highs last week on a weekly closing basis, going into a long weekend. I mean, investors are willing to take that risk with them over the holiday. And I think that speaks a lot to underlying demand.
Yeah, they had like a perfect storm set up here coming into it. You had that banking crisis, so a lot of people were pulling their money out of the banking system. They're looking for somewhere to park it. They're going out, they're buying any precious metals they can, everything from gold, silver, parking their money underneath the mattress, buying Bitcoin. So you had this kind of banking fear and crisis going on. You've got a lot of discussion about the dollar index. Will it lose its currency reserve status? So you've got that flight into the hard asset. Also, you got the Federal Reserve. They're at the end of their interest rate hike cycle. They're starting to look like, hey, a recession might be looming and we might have to shift dovish. So it seems like precious metals and specifically gold was that natural place for people to go.
So is it like this? Like this next chart? Are we getting ready to kick off the next secular bull run in gold and other precious metals?
It could look like it. I mean, it really depends on how it plays up. Now, I think that the chart, when you start breaking it down and you look a little bit more as far as a daily chart, you're going to see that gold's going to get just a touch more defensive at the moment. So, it is losing some of those, like the banking crisis. I think that was last week's headline. And then right now, we're kind of coming back and we're backing and filling at the moment.
So I'm looking at this chart here that you brought, and it shows this bullish pennant, potential bullish pennant here that resolved higher last week. It's now pulling back, and it's retesting that breakout level.
Yeah. So, okay, that's a real key thing. And I drew the pennant, the bullish pennant, because sometimes it's hard for people to interpret it looking at the daily chart pattern. So you can see that kind of off in the distance, and that's just my freehand drawing there. Now, pennants are usually sideways or horizontal, and what they do is they usually indicate the next run. And if you can see, we had that bull flag going up the pennant, and then we got the breakout of the pennant. So the problem is, and I knew that this was some of the fundamentals and some of that banking crisis, the dollar index selling off a bit too much. A lot of those things are the reason why, gold's starting to back off. So we came back down. We're testing that 2000 level. That's a critical level of support. Traders out there, if they got really bullish or they caught this whole wave up, they added on that breakout of the pennant, they're going to want to be cautious as we come back down to 2000. If we get a close below 2000, I think that's your first kind of warning shot that's out there that the bull trend might be ending. And then the next critical level is right around 1955. That was the day after the Fed, the reaction, that first sell-off from the rise up, that first big red candle. If you violate that, it could be a massive sell-off from there back down to the double bottom, the February low and the March low. Those are the two levels you're going to look that the gold market could go down to. So I like to be bullish on these markets. I think it's a great story, but it needs a little bit more kindling on the fire in order to keep going.
So tactically, you recommend feeding the ducks at this point, taking some profits.
Yeah, you definitely got to be a little bit more defensive. You got to trim positions. You got a little fat. You trim some of that fat off. So I think 2000, that's kind of that bull bear line. It's putting up a fight there. As we're recording this video, it's been fighting between the 1995 and the 2005 level, and it's going to be a tug of war right there. We'll see who wins at the end of the day.
Yeah, it's interesting to see silver trying to hold above that 25 level as well. That's also an interesting chart.
Yeah. So that chart there, and I kind of described it as like, because that's a weekly chart that goes from that all-time high in 2011, which was up around $50. And this is more of this descending wedge pattern, and silver has really had this battle going on for over a decade. Now, you've had a lot of volatility since 2020 with COVID and everything. A lot of people were concerned. They took their money out of the banking system. They liquidated a lot of their risk assets. They went into the metals. That's when we saw silver push up on that $28 to $30 level. And then since then, it's been kind of a chop. But you could see that we've had multi-failed breakout attempts to the upside, and we're right back at that level. So if we break out over this wedge, that could start a whole new wave and open up a whole new spectrum of where silver prices could go.
A lot of upside potential in the silver market.
Absolutely.
So what are we seeing here as we zoom in?
Yeah, so looking at that pattern, so that's another one. And if you look, a lot of my charts on my screen at home, they personally look like this. They got a lot of notes on there. I like to put everything out on the chart, what I'm looking for, what happened in the past. Oftentimes it can help predict, the future and where we've been. And we saw that resistance, that consolidation zone from about December onto February. And once the Fed started getting really hawkish and they started aggressively raising rates, you saw silver prices break down. You had COVID over in China. You had them reinstitute some lockdowns. It was really a big sell-off. And then once you got around those about March 8th on those lows, you really started to see people come in. Silver broken below $20. The phone was ringing off the hook for people trying to buy silver as a long-term strategic asset. It wasn't preparing for any kind of financial crisis, banking crisis. It's just a product that went on sale, and there was a big disconnect between the price of silver and silver eagles, which were trading upwards over $40. Twice the melt value is where those individual eagles are at. People started looking around. They realized that the bullion was trading below $20. They started to go in. That's where we got that rise going. And what it did was it built a series of small bull flags. And then you got a China reopening story. You got some stronger economic growth. And here we are today. We're punching through to the upside. We hit the $25 level. I think we're backing off just a touch. I wouldn't be surprised to see silver come back into that consolidation zone that we saw from December to February.
What's your level? What's your level in terms of near-term support for silver? Like, at what point are we back in that consolidation?
Okay, if you caught the move up, you're going to want to be trailing those stop losses. So we've been gradually moving them up, as time's gone on. Now, many people got in after that first breakout to the upside off those March lows, and we've been riding up stops from that point. Right now, a lot of those stop losses right around $24.20. So they're pretty tight up there, and with the market just right around that 25, if those traders and those bulls kind of give up hope and they think that a bigger correction is, chances are we're going to get stopped out of the position. So I think that, you want to trail your stop, especially when you catch like a 45-degree angle like that. I think 23 and 22, you're going to want to start drawing some Fibonacci retracements. You're going to want to look for that 50% pullback. And I think that's your level to get in. It's going to be right around 22.50. If the low is 20, the high is 25, divide that by 2, you're going to get 22.50 as your first major support.
Got it. I like it. And I like this DMI. down here on the bottom. Is this DMI plus and DMI negative?
Yeah, exactly. So I think that's a staple. And what it does is it'll indicate, and that was created by Wells Wilder back in the 80s. And what he did was he looked at these breakout of levels, and when you see those crossover patterns, and if you look at like the last crossover where the plus crossed over the minus, that was the start of a big trend. Look at the previous one before that. When the minus, the red crossed over the plus, that was a big bear trend. So that one you're identifying right now, big bull trend. What you got to watch is when they can't find direction and they're consolidating back and forth. You're probably going to get chopped up. That's when I look at that black line, which is the ADX. That measures the strength of the trend. When that starts taking off, and it is unbiased as whether it's a upward trend or a downward trend, it measures that strength and that rate of change. And that's where you could really start to see a bull market develop. The other indicator that I like to use, it's on almost all my charts, is the slow stochastic. Now, when the market goes into an overbought territory, it doesn't really mean, I think there's a misconception that it's overbought and it's due to correct. When it goes overbought, it means that it isn't a strong bull market, and those bull markets could be taken off for a while. So I think a key setup is I always look at DMI plus and minus, when the crossover happens. That's one of the first things that as a trader I check in on every market. And then that'll be where if I see the plus cross over the minus, okay, now I need to start looking at the bullish side of things. What are the driving headlines? Are they bullish? Are they going to support this market? Is there a bigger story where it can last for a duration of, say 3 to 6 months? And then I look at where are stochastics. Are they rising from oversold territory? And you get that crossover, that could give you an explosive bang to the upside. So where I like to see it is just starting to rise on stochastics, and you get that crossover and prices are going up. ADX is going up. There's your bull market right there.
You just described the move off of the March lows.
Absolutely. So that was what we were identifying. A lot of times too, that DMI, the plus cross and the minus is like a leading indicator, the way that it's mathematically factored. So what we'll do is we'll use options. And so if you get the plus cross and the minus, look at a call spread or a cheap call option just to stick the toe in the water. Then you start getting stochastics rising up. You get a small breakout on the chart. That's when you go in with a mini futures contract. Now you're wading into the pool about knee deep. You get the continuation, you go up to waist deep. Now there's no sharks going to attack you. You're not going to drown. You're looking good. What you don't want to do is just jump into a market head first in the deep end. Who knows? You might be confusing it with the shallow end and knock yourself out.
Great analogy. I love it. I really enjoy, but I use the ADX. And a big signal for me is when that ADX gets down in the low teens and a market is consolidating. And when it gets down there and it's in the low teens, you usually have an explosive move, whether it's higher or lower, who knows? But that's always something I look for.
That particular pattern that you're talking about is called the sleeping alligator. And when it wakes up, it wants to eat. And that's where that next it's going to be chomping up everything going out there, whether it's on the upside or the downside, who knows? But when the alligator opens up, you better run.
I'm going to use that. I like that. The sleeping alligator.
Yep.
Platinum. What do you think about platinum?
So platinum, something I want to identify on that is that, the chart hasn't gone anywhere, but it tends to trend for a while. Okay. It's only 50 ounce chart, a 50 ounce contract. So every dollar moves $50. Now, if you go back into like the October level and the November lows, this is back last year. It went on about $150 run. And what it was South Africa. All that platinum, about 80% of it is mined in South Africa. And I mean, it's very archaic the way they mine things. They need electricity in order to get down there to see what they're doing deep within these platinum mines. And if they don't have electricity, they can't mine. you've seen platinum demand continue to increase with, the electrification of grids and your EV vehicles and everything else. Just the demand's there. So if you get these rolling blackouts, you tend to get that market moving, and it moves pretty big. Now, we had another one of those blackouts start to occur about halfway through February, and that's kind of this steady grind higher. And you get these big pullbacks is when they do get, electricity back in, or they start figuring out new ways where they had conserved electricity for some while on the grid. Now they're ready to go on a big tear as far as mining a lot of it. So if you're trading platinum, you definitely want to have a Google alert going for, South Africa blackouts. I forgot what the name of the company is. It's a nationalized electric provider. You want to have that Google alert running as well, or follow it on Twitter as a keyword, because you see that pop up that, hey, for the next 3 days they're going to be offline. Platinum's going to react, and you're going to be the first one because that news coming out.
Wow. I've never looked at South African electrical grid and what's going on over there in terms of information regarding platinum. That's awesome. This is 80%. 80% of platinum's coming out of South Africa?
That, and then the rest of it comes out of basically Russia. So you got problems with electricity, and you got a conflict going on. So, they're the main providers of platinum. And if you look at the supply demand, the imbalance is growing even larger. So, I think platinum is long-term one of your most undervalued metals. And I remember there was a time when platinum was 2,000 and gold was only 1,000. So let's see if maybe something triggers in that platinum and it starts getting it more in lines.
Interesting. Copper. Dr. Copper.
Dr. Copper doesn't look like it knows what's going on right now. It looks like it's trapped in this. It's trapped in another pennant pattern. Remember, pennants are sideways or horizontal patterns, and that's kind of what it's doing right now. It's not like that silver chart, which was a descending wedge pattern, and it's surely not a flag either. So really, copper's on the fence. It's right at this $4 level. It can't really break out to the upside until you see a Chinese economy really picking up. You see more and more countries wanting to go and isolate themselves from dependence on energies from Russia. They start to improve their electrification, the grid, and everything else. You also want to watch, if you're going to trade copper, watch LME and Shanghai stockpiles. You start to see those stockpiles go down in Shanghai day after day, you're going to see copper prices creep up to the upside. So the way we've been playing it right now, when it's in no man's land like this, and again, you could look at, hey, maybe it's getting a little oversold, starting to approach it on the stochastics. We're not in an area where I would touch it. You look at the DMI plus and minus, it looks just like a bunch of, consolidation within there. So there's not a clear play there. You're going to have to, if you do have a bias on it, use calculated risk option strategies, and you wait. We're looking out September and December. Maybe something will happen. Maybe the Fed will pivot to dovish, and then maybe that's what could start to really boost that market.
I like it. Is the blue line the ADX?
On that particular one, the blue line is the ADX. I mean, look, it's not really gone anywhere. The best thing that the CME did was they launched a micro copper contract, which is only 2,500 pounds. So every 100 point moves $25. Makes it a little bit easier for traders. When it's a 25,000 pound contract, every penny move, every 100 points is $250. That could really weigh on somebody, especially if you're going to get chopped up in one of these sideways markets. So if I was going to approach it, I was looking at this thing and I had an upward bias on that market, I'd probably wait for those stochastics to start to turn up. I'd wait for that ADX to start to lift off those lows. Check out the DMI plus crossing over the minus, and then that's where you again stick your toe in the water. Well, again, we are looking at those call options going out September and December, but really this chart, it's not that impressive. So that's also another thing to, you got to realize, and you got to look at all these different charts kind of independently. I always say, just give me a good chart. I don't care what it is. And that's the one that I'll trade.
Right. You can even cover up the ticker in the upper left-hand corner. It doesn't really matter what it is.
I always said if we could make money trading dog poop and the chart's going from the lower left to the upper right, I'm going long it. Could be the next fertilizer play. I don't know.
All day. One chart that I do like is GDX. I wanted to share this with everyone. GDX last week, big weekly close, heading into the long weekend, and filling that gap. One of a series of gaps that really kicked off that strong sell-off last year. So seeing GDX back above this former resistance level, just it's hard not to like these mining stocks. And I think that's something that's really bullish, is kind of taking over right now, is seeing the miners participate, and also seeing GDX break out relative to the S&P 500 versus the broader market, kind of violating that downtrend line. So strongest trends, they go up on absolute and relative terms, and we're starting to see that in the miners. And one of the stocks in particular, one miner in particular, I like is Seabridge, at this nice multi-month base, just below a key Fibonacci level around, let's say 14.5. If and when it can take out that level, sites have closed above 14.50. I like it long towards $20, with the understanding that we're probably going to see a little bit of resistance come in around 16.75. What do you think?
I think it looks good. I love all the charts you brought up. That first one you brought up, I was looking at more from a head and shoulders pattern. I look at that as you got your left shoulder where that gap is. You got the head down at the bottom. It naturally pulled that perfect setup for the right shoulder, break it out to the upside. That chart could easily be achieved. Miners are going to do well in this environment. You got gold at 2,000, silver back at 25. A lot of these guys' cost base is significantly lower. I think they got the inflation under control. They're no longer in an environment where you've got, as a miner, you've got rising labor costs, which that's kind of stabilized. That's one of their biggest headwinds. Also, you got fuel, diesel fuel, crude oil. All those prices have come down. We no longer have crude oil over $100. And then you got interest rates. Although they've come up, I think a lot of these longer term projects, they've probably already locked in their interest rates or yields on those particular projects. So I think they're doing really good. I think that the miners have a good shot there. The other chart, that S&P versus gold, I was looking at that one as well on a weekly basis, and I saw that break out there additionally. I think that we could go substantially higher. U.S. equities could be starting to focus on the recession, which will come at the end of the year. The dovishness from gold, I think that's where you get that second tailwind, and you see that ratio really turn back to the upside.
Big tailwind for miners and just precious metals in general. Well, thanks for coming on today. I really appreciate it. Where can everyone find you, Phil?
So we're at Blue Line Futures. We're located at the Chicago Board of Trade. I actually operate the Florida branch office here part-time, and then I'm up there some of the time as well. We've been around since 2017, and we are just committed to trying to provide traders with, reliable, actionable research, the ability to trade on a platform. We really focus on technology, and we're here to really help out, whether you're a small retail trader or an institutional player. We got you covered.
Awesome. Thank you so much, Philip. And I will hopefully see you here soon. Take care, man. Bud. All right, everybody. Thanks for tuning in. Any questions, please reach out at info@allstarcharts, and we'll see you next time.